let's get everybody caught up to speed because it is almost 2:30 here on the East Coast, and you are watching CBS News 24/7 in our breaking news coverage. After the president announced he is increasing tariffs on China to 125%, while pausing all reciprocal tariffs on U.S. trade partners for the next 90 days. Pause, yes, but those reciprocal tariffs are still going to be at 10%. In a post to his Truth Social platform, the president said, quote, "At some point, hopefully in the near future, China will realize that the days of ripping off the USA and other countries is no longer sustainable or acceptable." He went on to say, quote, "I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%, also effective immediately." Treasury Secretary Scott Bessent discussed the decision.
Every country in the world who wants to come and negotiate, we are willing to hear you. We're going to go down to a 10% baseline tariff for them, and China will be raised to 125 due to their insistence on escalation.
Let's go to the big boards now and take a look at how the Dow is reacting, up almost 8% after a rocky start to the day. We also know the S&P 500 is up more than 8.5%. The tech-heavy NASDAQ is up almost 11%. And we, of course, have team coverage for you to break all of this down. This is a rapidly escalating situation. We know you have questions, and we're working on getting you answers. So let's go ahead. We've got White House reporter Aaron Navarro hanging out with us, Torian Small as well. But let's go first to CBS News Money Watch correspondent Kelly O'Grady, who lives with me in Studio 57. We got cots in the back.
Yeah.
So, Kelly, we just heard from Jacob Sonnenschein of Barron's. I had asked NASDAQ current status of bear market territory, and you sent me a very helpful email that you had sent to our CBS News colleagues. But I don't speak this as fluently as you do. So break down what it is that you would want me and all of us to know.
Okay, so before we got that announcement today, the NASDAQ was in bear market territory.
Yes.
Or it wasn't a bear market. That basically means...
Bear market retreating, a bear retreats in hibernation as opposed to a bull market. It means a decline of 20% from a recent high, right?
Right. And it was funny. I was actually talking with my my producer, Jamie Wen, about this. And she said, well, bear seems aggressive. And I'm like, think of it as a Pooh Bear. Think of it as a, or just, we're not feeling great about things. So look, it means 20% from recent highs. In this case, it was a record high going back to December 20th. It hit 20,173. That's what it closed at. Right now, we are at 16,924. So we're not in bear market territory anymore. That would have been just above 1,600. But we're certainly not on the record highs. And I actually looked at what the NASDAQ was right before we got that reciprocal tariff announcement last week. It was at 17,601. So we are not back there yet. We have not regained everything we lost in that sell-off. But basically, we are seeing a lot of excitement and relief and pouring back into the tech sector specifically, because those were some of the stocks that lost so much. And I want to just kind of, because I know I'm talking a lot of numbers here, I'm like, what does this mean for the average person? Today, you're likely going to see, based on where we are, we still got 90 minutes left in trading, some good news for your 401k. Because we're seeing a lot of tech stocks, the NASDAQ, the S&P 500 rebound. I know a lot of people that have been checking their 401ks have been feeling a lot of anxiety. Today, it's probably going to be in the green.
Okay, in the green, but not enough to cover the losses,
that we've seen in the past week and a half.
Okay. Yeah. Hang out with us if you can, because I do want to talk about a potential effect from these tariffs and this announcement. We know that the president has continued to say that he wants this aggressive tariff policy as a way to bring manufacturing jobs back to America. But even with this next 90-day pause on reciprocal tariffs, that baseline of 10%, supply chain experts say an approach, an aggressive trade policy like this is going to put a squeeze on many companies, and consumers are going to ultimately pay that price because they're not going to be able to absorb all of those costs. They're going to pass it on to consumers like you and me. So Tom Andrecki is the Vice President of Campaigns and Special Projects for Consumer Brands Association. Tom, thanks for being here. Your industry trade group represents more than 70 companies and 2,000 brand names we all know. Coca-Cola, General Mills, Hormel Foods, many other consumer giants. We're going to talk to you about something very different before the news changed drastically just about an hour or so ago. What is your initial reaction?
I mean, I think that what we see is a continued evolution of this administration's trade agenda. And from our perspective, we're America's largest domestic manufacturing sector by employment. We support more than 22.3 million jobs across the country. That's not something that folks think of when they think about food, beverage, household, and personal care manufacturers. They're typically used to think of domestic manufacturing as the steel industry, the auto industry, these other sectors. So we have a unique perspective on the tariffs. What we have consistently called for is this administration to really fine-tune its approach. Obviously, we are here for America first as it relates to boosting domestic manufacturing. Again, we're the largest domestic manufacturing sector by employment. So what I think is needed here is as we enter into this pause, there is a continued opportunity not only to negotiate with other countries, but to really refine the tariff approach such that the administration is going to achieve its ends of strengthening the domestic manufacturing sector here in America and protecting consumers from higher grocery prices and the other ways that they may experience some of the unintended consequences of the previously much more elevated tariff levels.
I know because I've read your blog posts and I've watched some of your other previous television appearances, and you say that many of the brands prioritize sourcing domestically, but there are some items, ingredients, whether it's the time of the year or just simply the nature of the product, that you have to source internationally. So are your brands still going to be hit with 10% reciprocal tariffs over the next 90 days?
I mean, the reality is that you can't source cocoa or coffee or spices, even products like tin mill steel or oats from Canada here in the U.S. You have to go to other countries for some of these ingredients that are found in a grocery store. Walk any aisle, you see the diversity of products on the shelves that comes from somewhere. More than an average of 90% of the ingredients, the inputs that the CPG industry needs come from domestic farms and suppliers, but you inherently need access to the world's the pantry, if you will. And so when tariffs, even at 10%, go into effect, you will see some of these impacts. And inevitably, in a low margin industry, these costs tend to be passed along to the consumer.
Do you imagine that some of the executives at the brands that you represent are sort of racking their brains today on how to make those 6-month, even 3-month decisions down the road, not knowing what the policy is going to be?
I mean, the notion of every business wants certainty and every business wants to be able to plan, to think ahead. All of these companies are already pursuing really aggressive productivity and efficiency initiatives. They're looking for ways to keep costs under control for the consumer. And this dates back through COVID, the subsequent supply chain disruptions. They've all experienced tremendous margin compression. And so now as they look to tariffs and the evolving landscape there, I think what they want is certainty. They want to understand where is the president, like what is truly the North Star objective that they want to achieve. And then knowing that we are the largest domestic manufacturing sector, that we have this unique perspective, we're not importing fast fashion or low-cost electronics from China, if you will. How can we be in the best position to really help achieve the president's objectives and deliver on some of the strong efforts that this administration is undertaking to drive the best deal for American consumers?
I know that your company says the industry's total contributions represent nearly 10% of the national gross domestic product. As of March, you were asking the president for targeted exemptions from tariffs on imports for some of the things that your companies, the companies you represent, use, cocoa and fruit, for example, which you've already named here in our interview. Is that still going to be a part of your continual long-standing ask of the president that these particular items get a carve-out? Is it just that your industry get a carve-out? And do you think that because your industry represents such a large portion of the GDP that the president will be willing to sit down?
I think it has to be a part of the conversation. When we talk about what is available domestically, I think it has to be a part of the conversation, chiefly because if you are offering some of those strategic exemptions, what allows for the president's team to do is inflict as least self-harm as they can while driving the greatest negotiating leverage and having the best hand at the table when they go and sit down with these other countries, right? So I think what you're trying to sort of tease out with this administration is there's a way to really have your cake and eat it too, if you will, right? That there's a better hand to play as they sit down, they negotiate these deals with other countries by really fine-tuning and continuing to tweak the approach to tariffs. There's a way that you can actually deliver, again, the best deal for consumers, minimize minimize some of the unintended consequences on U.S. manufacturers that rely inherently on some of these products that simply have no domestic availability, while still getting to some of the geopolitical aims and then broader economic aims that you're shooting for.
We know that investors on Wall Street are reacting with relief. My last question to you is, are you feeling relief in this moment?
I think that we're continuing to try to process and sort of dialogue in terms of what is the news today. This is a fast-moving and quickly evolving landscape, and I think that that's one of the challenges here. Is that again, businesses want certainty, they want stability, they don't want to know what they are reacting to, and I think that that speaks to needed collaboration, the ability for open dialogue, and just continuing that conversation to really fine-tune and address the president's trade strategy.
Tom Andrecki, thank you for your time. CBS News national reporter Katie Weiss is in New Orleans, where she's been speaking to people about the tariffs. Katie, obviously, you were originally talking to people about the effect. Now we've got this huge news here that many of these tariffs, well, postponed, yes, but 10% over the next 90 days. Let's be clear about that. But what are you hearing?
Well, good afternoon, Lindsay. I've been talking with folks who live here in New Orleans, some people who are visiting for conferences, and understandably, people are still feeling a lot of uncertainty, a lot of concerns at this hour, and just really worried about a potential trickle-down effect on both the lower-income families and the middle class. They're concerned about how these tariffs still against China could, impact the everyday cost of things, from like smartphones to even things that make homes more energy efficient, to make our houses, have better, cheaper power bills, I should say. Here in New Orleans, it gets really hot in the summers. Every penny counts. So people are worried about, is it going to be more expensive to make my house more efficient? There's also concerns about, what should I be doing with my retirement money? Are the banks going to be trustworthy? Should I be keeping my money in a bank? Should I go back to the olden days and put my money in cash under the mattress? Some other folks have been talking to me about, will this get better? Some people say, yeah, let's just hang in there, trust the system, it's going to work, it's going to be okay. But a lot of others feel they're a little more pessimistic. They're just concerned about some of the unknowns. Take a listen.
I'm starting to hear a lot more content, particularly on social media, about how to brace yourself for this kind of like a recession. We're like officially in a bear market, like all of those things, which are terms that I like kind of know, but not really. So I'm just like trying to take it all in and figure out like what are my priorities moving forward when everything seems so uncertain.
And you'll be hearing from a lot more folks here in New Orleans and around the country later tonight here on CBS 24/7. Lindsay?
Of course, Katie Weiss, thank you so much. And of course, if you have questions, which, how can you not at this point, right? Our Money Watch experts, Jill Schlesinger and Kelly O'Grady, are ready to answer them. I hope they're ready. Are you ready? Are you feeling ready? All right, so you can go to our Insta page, find this image on the feed, put your question there. You can also scan the QR code that you see on your screen right now to submit a question. And do join us tonight for our 1-hour Trump tariff special on the Daily Report at 6 p.m. Eastern. Right here on CBS News 24/7. This is all we'll be talking about at 6 p.m. Eastern. We do hope you'll join us.